Did you know that right now, 1 in 5 Australian mortgage holders is officially struggling to make their repayments? The average Aussie family is forking out hundreds, sometimes thousands, of extra dollars on their home loan every single month compared to just a year and a half ago. This has everyone asking the big question: is the Reserve Bank about to burn the whole house down just to put out the inflation fire? Welcome to the Aussie Finance Chronicles. Today, we're diving deep into the ticking time bomb that the RBA's aggressive rate hikes have planted right in the middle of Australia. As property market. Whether you're a homeowner, a renter, or just trying to save, this video is essential for understanding how this crisis is hitting your wallet. Let's get into it. So, where did this all start? The core of the problem is inflation. After the pandemic, a perfect storm of supply chain issues and huge consumer spending sent prices soaring. The RBA's main job is to keep prices stable, and their number one tool for that is hiking the official cash rate. Think of it as the economy's brake pedal. When they push it, borrowing money becomes more expensive, which is supposed to cool down spending and, in turn, inflation. But these hikes have sent a massive shockwave through the entire economy. Mortgage repayments have skyrocketed for anyone on a variable rate. But the real danger, the one that keeps economists up at night, is what we call the mortgage cliff. Hundreds of thousands of homeowners who locked in super low fixed rates of around 2% during the pandemic are now rolling off those deals. They're facing a brutal reality check with new rates of 6 or even 7%. For many households, this isn't just a budget adjustment. It's a full-blown lifestyle crisis that's forcing impossible decisions. This rate shock is creating a massive squeeze on everyday Australians. It's a painful double whammy. At the exact same time your mortgage or rent is going up, so is everything else. Your grocery bill, your car insurance, your electricity bill, it all costs more. This is wreaking havoc on family budgets. People are draining their hard-earned savings, canceling holidays, and even taking on second jobs just to stay afloat. And if you think this is just a homeowner's problem, think again. Where do you think landlords pass on their soaring mortgage costs? You got it, straight to their tenants. Rents in our major cities have exploded to record highs, pushing more and more people into rental stress. The RBA's rate hikes aren't just hurting property owners. They're pushing thousands of Aussie renters closer to the poverty line. It's a vicious cycle, and it's dragging everyone down with it. So, where do we go from here? Honestly, the experts are split. The optimists believe the RBA has done its job. Inflation is coming under control. And we might even see rate cuts towards the end of 2020 for Macquarie, heading for a soft landing. The pessimists, however, are painting a much darker picture. They warn that the full impact of these rate hikes hasn't hit yet and could trigger a serious downturn in house prices. This would put pressure on the banks as they face a rise in bad debts from people who can no longer afford their loans. The market's biggest fear is that the RBA has slammed the brakes too hard, steering us straight into a recession. For investors, this chaos creates both risk and opportunity. Traditionally defensive sectors like essential services, energy, and supermarkets tend to hold up better. But consumer-facing industries like retail and residential construction are feeling the pain. The next few months will be critical in showing which side of the forecast was right. So, what can you actually do to protect yourself in this financial storm? First, get forensic with your budget. It's time to ruthlessly track every dollar and cut back on non-essential spending. Every little bit counts. Second, if you have a mortgage, don't just sit there and accept your rate. Call your bank and negotiate. See if you can refinance to a better deal. Loyalty rarely pays in banking. And third, and this is the most important one, Build your emergency fund. Aim for at least 3 to 6 months' worth of essential living expenses. This buffer is your financial lifeline. This is arguably the most challenging economic period Australia has faced in a generation. Being informed is your best defense. What do you think? Is the RBA getting it right, or are they making a huge mistake? Let me know your thoughts in the comments below. If you want to stay ahead of the curve on the Aussie finance market, mortgage trends, and personal finance tips, make sure you hit that subscribe button and turn on notifications. You don't want to miss what's coming next. Thanks for watching, and I'll see you in the next video.